Megan Casella is live in Washington with what we know as of now. Mike Pond has the tariff impact on inflation. He's Barclays global inflation guy. And Michael Landsberg has the kind of round things up for us on what the market impact now and into the future could be. It's great to have you all here. And Michael Landsberg, to Pond's point, you know, the inflation like market or real rates, they might not have looked at the report yesterday and said they have to extrapolate, but the bond market moved a lot. You know, the 10-year moved, unless you think the 10-year moved up because of what we were learning about, you know, Republican spending plans or what do we call the bill? I guess it's kind of his spending plans. You know, the budget report in the afternoon. Why do you think rates have moved higher?
Kelly, I think rates have moved higher. The idea that we're going to have higher inflation, we believe that since September. You know, we had basically inflation going to 3.5% basically from September to September, regardless of who was winning this election. Just in terms of various, rates of acceleration, base cases, that we had it going up. I think the markets realize inflation is going to be here for a while. The Fed's going to be on the sidelines. I think that's going to mean higher rates, and growth's been good. And one of the things I think that people worry about is the economy's been pretty good. We've seen earnings growth on the stock side, S&P up double digits, NASDAQ's up double digits year over year. So the economy's pretty strong. Corporate earnings are strong. And I don't see the Fed kind of coming in to rescue everybody now with cutting rates. So I think that's where the market has realized we're going to be here for a while.
Yeah. And Michael Landsberg, I don't know if that kind of makes the point you were just trying to make.
It does. I mean, I think the bond market, for the most part, we're going to be range bound. I don't see rates moving up much higher from here, but I don't see them going much lower. I think we're going to have to be in this environment where we're investing with an environment of higher inflation, higher rates. That does not bode well for small caps. It's a sector that we haven't liked broadly. For over 3 years, you basically made no money. In fact, you're negative for the last 3.25 years in the Russell 2000 index. You got to stay away from that spaces that are not going to do well with higher rates. And again, position yourself. Higher inflation has been a call, like I said, we've made since September. The CRB index is up 20%. Most investors watching this probably don't have a commodity exposure. You should, because commodities have done well. We think they continue to do well, really even ex-energy. God forbid energy got in the mix here. That inflation could go higher. Inflation's ramped up with no help really from oil.
Is that why you like GE Vernova, or your stock idea is a little, which commodities do you like?
Well, from a commodity standpoint, we kind of like broadly, some of the commodities. I like GE Vernova for the simple fact that there's an energy shortage in the world, and we're going to have a lot of tech names that are going to demanding energy, and they've got kind of a nice play on traditional electricity, but also they've got a good space, if you will, in the nuclear small modular reactor business. I think that's important as well to have some of that future business. I think that would be there.
All right, gentlemen, thanks. Mike Pond, Michael Landsberg, we appreciate it today.